Good to be back with you again. This week I'll be talking about a Canadian iron ore developer that's heading down the feasibility pathway. First onto markets, the big news the last week was the rebound in lithium prices. That was spurred on by Cattle's closure of its plant in China due to permitting concerns. New laws regarding permitting of mines in China came into effect on July the 1st. So that gave quite a bit of a swing to a number of lithium producers and explorers, in particular the likes of Pilbara Minerals, which has moved up from around about $1.20 a few months ago, hit $2.31 earlier this week. Certainly looking at spodumene prices around $800 a tonne, that would put about $130 million of EBITDA to Pilbara Mine, so that would be more than welcome. The carbonate prices put on about 8% in China, up to about $10,600 US a tonne for the September contracts. Whether this is sort of a short-term rally or not remains to be seen. A bit more resilience in the economy in China, certainly reflecting in the metals trade. So copper concentrates up about 2.6 million tonnes, which is about a 9% increase year to date. Steel exports are also up about 9.4 million tonnes, so about a 30% increase year on year. Onto the stock of the week, Cyclone Metals Limited, ticker is CLE. I have mentioned this a few times. The big news out early in the week was the release of the much anticipated scoping study at its Iron Bear project in Labrador, Newfoundland. As you would probably recall, early in the year it signed a $138 million farm-in deal with Vale, which is the third largest iron ore mine in the world. And that will carry them to about 25% to production if they don't elect to acquire the project at the end of the feasibility study. So pretty eye-watering set of numbers. Net present value using an 8% discount rate of just under $10 billion US. CapEx is high, $4.6 billion US, but not unexpected. And that was based on a 25 million tonne per annum operation, producing a blast furnace concentrate of around 16 million tonnes per annum and direct reduction pellets of around 9 million tonnes per annum. A lot of unique things about this project. The DR magnetite concentrate's a very high grade, 71% iron, and unlike many of its peers, very low silica, around 1.1%. One of the most, if not the most competitive magnetite project in the world as far as production of DR pellets is concerned. Power is obviously an issue, but they've managed to identify 100% low-cost renewable power, which is a combination of wind and hydro. The pre-feasibility study has commenced. That should be finished March, April next year. Currently underway is the drilling program. They're looking to increase the JORC resources from 16 billion tonnes, hopefully up towards 25 to 30 billion tonnes, just under 30% Fe, and hopefully a big increase in indicator resources to push that mine life out beyond the current 18 years. Good infrastructure, there's rail. They're also looking at building a slurry pipeline. There's port access at Sept-Îles. So one of these unique projects that has metallurgy, logistics, and geology going in its favour, with a big funding partner, with a big balance sheet. So keep your eye on that. Plenty of volume in the stock, sitting at around an 80 million market cap. So I think there's plenty of room to move up. That's all for this week. I look forward to speaking with you next week.
For more ASX news and analysis, subscribe below.